What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Last week's video didn't quite get to 100 likes, but maybe this week's can, so help me out, drop a thumbs up. I really do appreciate it, and I'm sure the YouTube algorithm does as well. And real quick, if you're interested in receiving 5 to 10 swing trade ideas per week, then the first link in the description will get you signed into our free weekly newsletter. We're also on Instagram at tradebrigade.co, and we do have a live Discord server if you want to chat with myself and other traders in real time. Without further ado, let's hop into the analysis. Starting out on our SPY weekly chart, as always, you can see that we are in all-time high territory, so we'll go ahead and mark in our new all-time high based on our weekly chart here, and that is at 338.12, so somewhere up around that level, off by 1 penny. Nice. Anyways, the weekly candle shape is a fully green bar with a tiny tail or wick on top, similar in structure to last week's, a little smaller and smaller wick on top. But one thing to note is that it was on lower volume than last week, so moving into all-time highs on lower volume is always, a little bit of a shaky ground. Obviously, as we dive into the daily, we'll see some gaps below that still remain. But overall, the market is just wants to do one thing, which is go up. We had 2 weeks of pullback, which was, in my opinion, not enough pullback or sideways consolidation through time. However, you're not going to fight a train. You're not going to step in front of a freight train when it's moving at, 100 miles an hour, and that's exactly what the market is doing right now. So dropping it down to our daily, you can see that we do have that resistance point up here at the all-time high where that wick is, but the day that follows is it's a hammer candle, but we call this a hanging man just because it's at the top of a range instead of at the bottom. It doesn't really signal a reversal yet. It shows that there was some strength to the downside, but the bulls fully recovered and actually closed the day green. You can see volume has picked up throughout the end of the week, although it was a lower volume week overall, but you can see it was slowly picking up as we continued. So based on this, I would say that we'll at least reattempt the all-time high here at 338.12, if not make a move over it. If we go into blue sky territory, as always, it's whole and half dollars and any intraday levels that do form. If we see any more of a pullback, then this is a previous area of resistance, which is now support. That area is at 334.20. Anything lower than that, again, we're just going to go down the list. We have 332.18, lower than that, and there's sort of this gap that remains in the chart that could potentially fill if we break down below the low of this hammer, and that gap fills to the high of this candle, which is right around 330. And if we keep looking back to our left, again, another gap here where if we break down below 327.46, fills to the high of this candle. The high of this one is at 326.16. And our 50 SMA should act as support. It'll start to coincide with that. And again, that's a major pullback. I'm not saying the market's going to do that, but those are just some areas to pay attention to should we see any sort of reversal off of these highs. So the Qs, very similar. Again, just moving in the upwards direction on slightly lower volume than what we've seen in the past here, but that's A-okay. We do have another all-time high up here at 334.93. So again, a freight train. You don't want to step in front of this. You don't want to go short here until you really see some confirmation. Blue sky territory, obviously whole and half dollars and intraday levels that form above. To the downside, we have some support. It looks like it might come in a little bit earlier than our level here at 230.38. So I would call this area where we sort of saw that bounce on Thursday happen. And I'm not sure if there's an intraday level here in that red day, but you can look. That's right around 232.42, so 232.50 if you want to play a round number for ease of remembering. Should certainly do that. Anything lower, we're looking at 230. Lower than that is sort of this level down here, noted by this high that was then support here. And that level is 225.95, so 226 if you want to play a round number. And then this gap fill could potentially happen. Again, I'm not saying it's going to happen, but if we do get down into this level, keep it on your radar. If we break down below the low of this candle, which is at 224.65, the gap fills to the high of this candle, which is at 222.89. So IWM and the small caps offering much more structure on the chart. Obviously, we're not near the all-time highs here on this one. We're just below the swing high, if you will, at 170.56. So right now it looks like we're sort of seeing some support come into play at our zone here, which we expected now that we were above this resistance level here at 167 and 167.89. You can see this sort of zone has acted as resistance, and now it's sort of acting as support with this tail here. Based on this candle and the increased selling volume there on Friday, I would sort of expect it to either go sideways or to the downside. It looks like we are running into some resistance here around this level at 168.70. So keep that in mind. Price will have to fight back up through that. And if it does, we're targeting our 169 or 170-ish level, 170.50 if you want to go to the all-time high here. That's our upside resistance. If we break out over that, then we have 173.29, which is sort of a higher resistance there. I would place some intraday resistance if we do get into this sort of territory. To the downside, if we see that further pullback like I was talking about, if this level here at 167 breaks, then we're looking at our next support down below at 165.38, and our 50 SMA is coinciding with that right now. But obviously as the week continues forward, it will start to creep up and move away from that level. So if it gets down there in a flash, it could be a super support. If it doesn't, then just look for it to play an intraday bounce somewhere in the middle of this range if we do see that pullback. If you guys are enjoying the analysis so far, be sure to leave it a thumbs up. Let's get to that 100 like mark. Without further ado, let's hop into these companies. All right, so Apple has continued to sort of consolidate ever since earnings. It sort of stopped its straight up trajectory. We've sort of gone sideways, chopped around for a bit, but you can see that we're finding some support at this level at 322.92. You can see we've had resistance in the past. Now that we're above it, it is acting as support. Touch 1, 2. Next thing we have to see is a breakout over our 327.85 resistance all-time high here if we want to see price continue in the upward direction, in which case we're playing whole and half dollar resistances as well as any intraday levels that do form. As we continue to go sideways, we may meet up with our white dotted support trend line, in which case it could be a good potential buy, and buyers see that as a good opportunity pushing prices higher. So keep that in mind, keep that as something you're watching for. Anything lower and we see sort of a breakdown below this support here, then our next key area on the chart is based, I'd call it right around here. You can see we had resistance and then support here. That level is at 319.17, so keep that one in mind before we go down to our next sort of major support here at 312.45. Anything lower than that, and we're sort of looking at this next zone down below around 304 to 300. So in last week's video, we did identify that Netflix was essentially flagging, where we see price come up, pull back a little bit, bull flag, price come up, bull flag again. So we're seeing that happen again and again. Right now we are at a resistance point up here at 386.03. You can see we have two pretty important looking wicks up here around that level. So to me, it looks like price may want to pull back and sort of do one of these bull flag type of things where we see a move up and pull back. So we're looking for support to come back into play around 375.80. If we see further pullback than that, then maybe some of these levels in here should act as support, which are around 371.33. I'm not going to mark them off, but just keep that in mind. If we do see a pullback greater than this 375 level, if we break out again over our 386, I'm not entirely certain that that one will happen, just because that is very historic resistance, as you can see in the past here. Touch, and there was even one further back than this that the chart isn't picking up yet. So it's blue sky territories, whole and half dollars as we get into that sort of area. Again, the pullbacks are sort of covered. Major support if we look to the left and continue to move in the downward direction. Again, I'm not forecasting this to happen, but if we do get down into these levels, you can see just all the price volume that is around here, which is 343 and 338. So that might act as a magnet if we see some sort of major reversal out of here. But again, to me, it looks like price wants to continue flagging. Boom, we see a move up, consolidation. Let's get rid of this trend line. There's actually another one I'm seeing that we can draw in, and it's sort of a channel that Netflix has been in. So if we do something like this, that's certainly a respectable 4-touch trend line. If we see some pullback, it is starting to get kind of way away from it. If we see some pullback into it, again, could be a very nice buying opportunity. So if you're watching the channel, I'm sure you may have seen the Tesla in-depth analysis. I've cleaned up some of those levels just because it was really hard to look at the daily chart, but it's quite clear now what we're looking at. You can see we are pretty much range bound in between this area up here, so 817.50, and down here to 735.93. Quite a large range. We've essentially just gone sideways throughout it, but we are starting to make a knocking on the door pressure cooker pattern up here at this level. You can see touch 1, 2, 3 as we continue to build pressure below, and as our lows continue to get higher, that pressure just builds, and when this trigger point is essentially broken, boom, all hell breaks loose, and maybe we see a move back up to our all-time high. So that is sort of covering the upside to the downside. Again, if this support breaks down and our sort of sideways action leads to more downside, then you can see we have support coming into play at 687. Again, below that here at 673. If that breaks, we see a gap fill to this 2-island candle to Candle Island, rather, that we talked about in that Tesla analysis video, and then another gap below that as well, filling all the way down here at 588. So lots of levels to pay attention to. Go ahead and reference that other Tesla analysis that I did if you want to see some more granular levels. But again, I think the play here is watch for some sideways consolidation and a breakout one way or another over this 817, or a break down below this 735, backwards twice. Nice. Alibaba is slowly trying to recover after all this coronavirus stuff is sort of fading into the background of the news. Is it still a threat? Absolutely, but as the news starts to care less and less about it, so does the chart. So you can see we do have some resistance that looks like that, resistance trend line here. So if we could break out over that, then certainly our next point of resistance will be this 225.86. But if we can get over that, obviously targeting this all-time high up here at 231. If we see some further pullback around this level, then our 50 SMA will act as a intraday bounce, or it should anyways. If we see a touch in between these two sort of support zones. If we break down though and continue lower, we're looking at a support zone between 213.44 and 211. We might even be able to do something like this. It's a very, very steep trend line, but you can see also touch. Let's see sort of how this symmetrical triangle sort of plays out. If we see that breakout, again, looking for that all-time high. If we see the breakdown, targeting sort of this first support zone, anything lower than that is at 204.77 and $200.71, some of these lows and highs that were previous resistance in here. Facebook, I'm leaving these trend lines on just because I feel like they have some magical power. Don't really pay attention to that, but, we saw all these touches, and then, now that we're further away from it, I want to see what happens if we get back into it. If we get back into it and it totally ignores them, I'll get them off the chart, but for right now, they're staying. You can see we are finding support above our previous resistance here at 212.79, so let's see if we can continue to move in the upwards direction, get into this gap fill. We're sort of in the gap fill around 50% of the way now, but the gap closes to the low of this sort of bigger candle over here, and the low of that is at 218.45, sort of marked off by this support zone and resistance zone that we had in here at 218. So keep that in mind to the upside. Anything higher than that, and we're looking at our previous support to act as resistance, which is at 220, and then we have resistance at 222.46. Obviously, very strong resistance there. Anything to the downside, we're looking at 208.33, 205, and 203.42. Again, we could do something like this where we draw in. I don't know why it's not clicking. That's cool. Where we have a support that looks like that and a sort of resistance that looks like that, and we can watch to see how this one plays out. It would be very funny if it acted similarly to this wedge and just continued to respect it and then respected it even as it broke out. So keep those areas in mind as we go throughout the week. Again, sort of lower volume here, tapering off now that we're getting above that resistance level. We're going to watch for volume to come in if we continue to break out and fill this gap up to this 218 level. Nvidia had a huge gap up on earnings, as you can see here, but it did form an inverted hammer candle. That big wick on top normally indicates that there are a lot of sellers hanging out up here. Price could be overvalued, so we're going to pay attention to see what happens. I'm going to grab the right tool. We're watching for a first breakdown of this support, or essentially the low of that candle, which is at 286.16-ish, somewhere in that area. If we see a breakdown, then there could very well be the potential for a gap fill or a partial gap fill, 50% gap fill, which leaves us at right around 280 if you want to play a round number there, or 280 just about. So look for that if we start to see a gap fill potential to the 50, and if it continues, obviously we're targeting the full thing, which closes at 273.23. Any further pullback than that, and we're looking at support to come into play at 266, 259.34 based on resistance, and then when we broke out of it. But yeah, if we continue to the upside and we break out over our high of the candle, all-time high here at 294.97, then we're playing whole and half dollar resistance into blue sky territories, as well as any intraday levels that form. Microsoft had a nice little move up, and now it's sort of consolidating through time. You can see big sell-off on, what was that, Tuesday. But now we're essentially just going sideways, so we're waiting for a breakout over our 185.50-ish level here, which is previous resistance, and it's acting as resistance now. If we can break out over it, then sure, why not target this all-time high up here at 190.70? But if we break down below sort of this level in here, this one isn't quite as important anymore at 184. It's more like 183.21. As you can see, support here. If we break down below that, then we're looking at a move to our next support below, which is at 176.30. There's a gap to be filled here. That's at 174.13. So look for a gap, that gap fill reversal potential there. And then another gap below, from 170.16 to 167.50 just about. Yeah, it is partially filled here. So that's quite a ways away. But again, I think the move here is just to watch for some consolidation through time, some sideways action, and see if we break out over this 185.50 level. Amazon has done a really good job of holding the gap, obviously. We've made a nice advance here. We do have a resistance trend line that started to develop. If we draw in something that looks like that, you can see prices sort of pulling back. This could potentially turn into a bull flag where we see price consolidate for a little bit, and then boom, if we see a breakout over this resistance level, then we see another leg up. So keep that in mind. Could always be a possibility. We do have the all-time high resistance to break through if that does turn into a real thing, which is at 2185.95. Anything lower than that, and we're sort of looking for these pullbacks to happen. Our next really structural level is here at 2098. Anything lower than that, and we're looking at 2054.94. And so on and so forth. Huge gap in the chart. If we get into that level, I would not expect it to fill in one day. Is the possibility there for it? Yeah, of course, but it's highly, highly unlikely. So look for maybe a 50% gap fill, and then some sideways consolidation, and then either a move out of it or again a move to fill the gap. But I think that's quite a ways away. Obviously, the sentiment here is bullish. It's consolidating and a little pullback here. If we see another leg up, $1.5 into blue sky territories as we break out over 2185. Alrighty guys, that's going to do it for this week's episode of the Weekly Watchlist. If you enjoyed or learned anything from this video, be sure to give the video a thumbs up or let me know down below in the comments section. If you like this type of stuff, subscribe to the channel. The Weekly Watchlist comes out every Saturday usually to give you a trading edge for the week ahead. And with that, I wish you a green trading week.